patent box regime is a new piece of exciting tax legislation that's being introduced into the UK and takes effect from 1st of April 2013. And to summarise it in one sentence what it means for companies, they can pay a rate of only 10% corporation tax on any profits they have that are derived from patents. The patent box is designed to encourage innovative companies in the UK and create innovative jobs. And it's hoped by the government that this 10% rate will encourage companies from outside the UK to come and set up here and create high-skilled jobs. And the way that the patent box works, it's a long and difficult calculation that requires a lot of accounting and tax information to be collected and put together. Quite apart from the 10% headline rate, which is very generous in itself, there's a number of provisions in the patent box legislation that companies will find very attractive. One of those is that products that incorporate a patented item can claim the 10% rate. So if you think of a large product with a very small patented item in it, potentially all the profits on that large product could qualify for this very favourable rate. As I say, there are several provisions, but two I'd particularly like to mention. Firstly, it's possible to qualify for the 10% rate on patented processes as well as patented products, and they're things that often get overlooked, so companies need to investigate that very carefully. And finally, there's a very nice interaction with research and development R&D tax credits. Getting into the patent box regime does not affect your ability to claim R&D tax credits. So for some companies who are developing products, they'll be able to claim R&D tax credits while they're loss-making, but then when they get profitable, they can pay tax at only 10%. Briefly, there are two qualification criteria that need to be met. The first one is, does the patent qualify? So what you've got to look at there is, do you own the patent or do you exclusively license it? If you meet either of those two, then yes, you can meet the condition. Secondly, it has to be the right kind of patent. So it has to be one that's issued by the UK Patent Office or by the European Patent Office or by a country on a list that's been approved by HM Revenue and Customs. The second condition that has to be met is whether the company qualifies. And there are two conditions again. The development condition, which you meet if you've actually developed the IP that gives rise to the patent. And the second condition is the active ownership condition. Now, you have to meet that if you're part of a group. And you can meet that if you meet the development condition, i.e. you've developed the work that led to the patent, or you actively manage the patent and the IP. Although the patent box legislation isn't coming in until 2013, there are lots of things that companies need to be doing now to make sure that they can take full advantage. And the first thing they need to do is to look at their IP that they've got at the moment and take an audit of it to see what patents they actually have. In a big organisation, that could be quite a challenge, and check that they're still valid and in date. They also need to be speaking to their patent attorneys to see if there's other products or processes or any other IP that could be patented, because a patent process takes some time to get in place.